Asian markets bounced back on Tuesday, recovering from recent losses. Could a TikTok ban reshape the digital landscape for millions of Americans? And we examine Argentina's economy 1 year into President Javier Milei's tenure and the impact of his bold economic policies. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Asian markets rebounded on Tuesday following losses on Wall Street that saw the S&P 500 and Nasdaq pull back from record highs. Mainland China's CSI 300 index jumped 2.1% in trading, while Hong Kong's Hang Seng was up 1.2%. That's after Beijing announced what it calls more proactive fiscal measures. Meanwhile, China's imports posted the sharpest decline in 14 months in November, largely missing expectations. South Korea's benchmark Kospi jumped over 2%, while the small-cap Kosdaq surged up 5% after the leader of the main opposition party said they would pass a downsized budget bill for the next year through a plenary session later in the day. Australia's S&P 200 was trading down 0.56% after the Reserve Bank of Australia held its benchmark rate at 4.35% for the 10th consecutive time. Over on Wall Street, tech stocks retreated ahead of key inflation data and after a Chinese regulator said it was investigating chipmaker Nvidia over possible violations of the country's anti-monopoly law. For more, I'm joined by George Khoury in Dubai. He's Global Head of Research at CFI Group. Good to have you with us, George. Now, Asian indices, particularly South Korean stocks, have bounced back from recent lows. What's helped boost sentiment?
Hello, Taiba, and thank you for having me today. So basically, it's purely a correlation between the different markets and the region specific. So after we have seen that China is committed to a certain point to maintain its projections in regards to the economic growth for 2024 and projections for 2025, they have suggested the possibility of further stimulants or stimulants packages in regards to a looser monetary policy, in regards to injections into specific industries and sectors, and it might be mostly into the real estate sector in specific. And because of this optimism and potential for stimulants that is expected, it has boosted the whole region, whether it is on Chinese indices, whether it's on Korean indices, or even Japanese as well, if you look at it from a regional perspective. Also, for Korea in specific, we have seen that the government was able to suppress whatever chaoticness was happening last week. Even though there was an impeachment during the weekend from a political perspective, however, it failed to proceed. This leaves volatility in the market. This still tells us that there is more to come maybe from what we have seen based on last week, but at least the measurements that the government has taken was able to suppress whatever was happening. And this is why we have seen the recovery to a certain point after the drops that we have seen last week in Kospi and other indices as well.
Let's have a quick look at China now, where imports have fallen to 14-month lows. What does this suggest about Beijing's recovery efforts?
Unfortunately, this is what we have been expecting for the past year, approximately, Taiba, and China in specific. So despite the stimulant packages that were happening and the stimulus that was happening in China in specific, we have lack of trust, whether it is from internally or externally, into the financial health being of the Chinese economy as a whole, especially from the external factors and external foreign investments that we have seen dropping for the past 6 months approximately. And of course, this is something that everyone knows now. Projections for 2025, we're going to have an increase in trade wars or potential increase in trade wars between the US and China, which might even impact the situation more and more. And this is where the Chinese government has, and the Public Bank of China, they have a huge responsibility ahead of them in order to support the possibility of what is coming next in year 2025. And this is something extremely important where the president has mentioned that our utmost goal and objective is to actually reach the projected growth for 2025, which is at 5%. However, based on what we have seen now, whether it is from the imports perspective that are dropping, obviously, and also from CPI, looking at the drops in CPI with 0.2%, approximately, which also shows that we don't have enough consumer confidence or consumer spending as well that is actually supporting the economy and economic activity as a whole.
Okay, George Khoury, we will have to leave it there. Thank you very much for joining us.
Thank you, Taiba.
Argentinian President Javier Milei has completed his first year in office while facing growing dissatisfaction over his dramatic economic overhaul. Aggressive cost-cutting measures have succeeded in bringing inflation to its lowest level in 3 years. However, that progress has come at a cost. Consumer spending has collapsed and millions continue to grapple with the challenges of a strained economy. Omar Baccalolo has the story.
When Argentine President Javier Milei took office in December 2023, he promised to pull it out of a dire economic crisis. The self-confessed anarcho-capitalist brought a chainsaw to his campaign rallies to symbolize his commitment to cutting public spending. Within months, he devalued the peso by 50%, cut fuel subsidies, and reduced government ministries by half. Now, a year into his right-wing presidency, those drastic measures are finally starting to show some results. Inflation is Milei's top priority. Prices rose 2.7% in October. In most parts of the world, that will be a huge increase in just 1 month. But in Argentina, it was the lowest monthly rise in 3 years. On an annualized basis, inflation is down to 193%, dipping below the 200% threshold for the first time in nearly a year.
It's interesting because wholesale inflation ran at 54% per month when we arrived. Today it is running at 2% per month. It travels less than the crawl plus imported inflation. Therefore, we are technically close to zero monetary inflation.
But while the numbers are getting better, citizens still tighten their belts to make it to the end of the month.
The price of meat hasn't gone up this month because there is very little consumption. As consumption goes down, sales also go down. And well, it's a bit complicated. Unfortunately, we started November with a small increase in chicken and meat purchase values. We are absorbing this increase, but there will come a time when we'll not be able to absorb it anymore.
Perhaps inflation has not increased so much in the last month, but the reality is that people cannot buy domestic consumption. That is something very clear. I think there is no doubt about it. Now the increase in prices or inflation is not being seen, but there is not much margin for it to happen, and there is no one to buy either.
Despite Milei's efforts to control inflation, over half of Argentina's 46 million people are now living in poverty. The austerity measures have also deepened a recession that began last year, with the IMF expecting a 3.5% economic contraction for 2024. So, while inflation may be cooling, critics argue that Milei's few wins have come at a steep cost for Argentina's middle class. Omar Baccalolo, TRT World.
For more, we're joined by Latin America analyst Colin Harding in Manchester in the UK. Good to have you with us, Colin. Now, a year ago, Javier Milei started his libertarian economic experiment to transform Argentina. During this period, inflation has decreased, but poverty has risen more than 50%. How do you evaluate these differing results?
Well, it's a very good question. All the commentators, both local and foreign, are trying to puzzle this out. How can you have a situation in which more than half the population live in poverty and more have been driven into poverty, and at the same time the president enjoys a popularity of more than 50% at the end of his first year? I think the answer lies in Argentine history or recent history. Argentina's had decades of economic failure under extreme interventionist government with a big state, with a bloated public sector, with massive public spending leading to deficits and chronic inflation. Milei is trying to do the opposite, and so far he's had some success, as we've seen, with reducing inflation. And a lot of people unexpectedly are saying, well, we've come this far, let's see if he can continue. Let's see if his promises of economic growth in future, of massive investment pouring into the country and deregulation leading to freedom for everybody, let's see if he can pull it off. The jury's out at the moment, but he's had success in his first year and people are prepared to give him more time.
And what could be the biggest challenges that Milei will face in his second year in office?
Well, getting the economy to grow, for people to start feeling better off. They certainly aren't at the moment, as we've seen. People having to tighten their belt. They've got no money to spend. There have been thousands of people thrown out of work by the abolition of some ministries and public sector bodies. We'll have to see if the projected growth of the private sector, the foreign investment that's expected to pour into energy and mining projects, for instance, does lead to more employment and to more prosperity for the country. So far, he's had, with the special powers he's been granted, he's had some success, but people want to see that there are going to be real results in future. He's claiming massive triumphs, and this is the beginning of a new epoch for the best times ever for Argentina, but it's a bit soon to be saying that, and people want to see real results in future.
Well, we will have to wait and see how that all plays out. Colin Harding there in Manchester for us. Thank you very much for your time. Now a quick look at some of the other top business stories from around the world. Shares of Turkish construction and cement companies surged on Monday amid growing optimism about their role in Syria's post-conflict reconstruction. Foreign Minister Hakan Fidan emphasized Turkey's commitment to supporting the rebuilding process and facilitating the safe return of Syrian migrants. Analysts highlighted the potential opportunities for Turkish firms in construction, cement and steel, citing Turkey's strategic location and strong trade ties as key advantages. Oracle has reported a 9% growth in second quarter sales, with net income rising 26% to $3.15 billion, or $1.10 per share. But the cloud software company's fiscal second quarter results missed analysts' expectations. As a result, its shares fell 7% in extended trading on Monday. Global insurance giant Arthur J. Gallagher is buying insurance broker Assured Partners for $13.45 billion in an all-cash deal focusing on property, casualty and employee benefits in the US. The acquisition will strengthen Gallagher's presence in areas like transportation, energy and healthcare and expand its business in the UK and Ireland. The deal is the largest sale of a US insurance broker to a strategic buyer. And the International Monetary Fund and Ecuador have reached an agreement on a loan program review, allowing the release of $500 million to support the country's economic stability. This comes as Ecuador faces a tough economy and an electricity crisis caused by a historic drought. IMF Mission Chief Varapat Chensavastijai says the goal is to help improve living standards for all Ecuadorians during these challenging times. A US appeals court has upheld a law requiring a divestment of TikTok or TikTok's owner or sell the social media company will be banned. It's a major setback for the Chinese-owned short video app. In August 2020, then President Donald Trump tried to ban TikTok, citing national security concerns, but the decision was blocked by courts. In April this year, President Joe Biden signed a law giving the Chinese owner ByteDance 9 months to sell its stake in the app or risk a ban. Now TikTok faces being banned in the US starting January 19th, the day before Donald Trump is set to be inaugurated as president once again. The ban poses a significant threat to TikTok, which generates billions in advertising revenue for ByteDance. But despite the looming ban, brands continue to advertise on the platform. TikTok says it plans to seek an injunction to delay the ban until the US Supreme Court can review the case. If the ban does go into effect, Meta Platforms, the owner of Facebook and Instagram, is expected to benefit the most, followed by Alphabet's YouTube. Both companies have launched short video features in recent years to compete with the Chinese-owned app. In 2024, TikTok's US ad revenue is projected to reach $12.3 billion, highlighting the high stakes in this legal battle. With me in the studio now is Dennis Kenji Kipka, Research Director at Cyber Intelligence Institute. Thank you very much for joining us, Dennis. Now, TikTok has quickly become one of the biggest social media platforms. How could a ban like this impact American creators?
Yeah, this will definitely be a big disruption because, as you already mentioned, TikTok is one of the biggest platforms and it has millions of users and they have really millions of followers there. So a lot of content creators rely on TikTok, how TikTok is functioning, and a lot of revenues on social media are also created in the US on TikTok. So if TikTok would be banned, this would have definitely a big impact on all social media activities all across the United States.
Right, and creators are now looking for alternative platforms as we speak. What platforms could they potentially take their business to?
Yeah, we have already seen this situation when Elon Musk decided to buy X or Twitter. So there was a flow of users to other platforms. It is to say that TikTok, regarding the Generation Z and the millennials, is one of the strongest platforms. So we do not have adequate other platforms. Maybe YouTube would be a platform that could be accessed, but also Facebook, which is owned by Meta. And there are currently also new platforms being created, but it's not true or it's not sure if these platforms will be really successful as TikTok is, because TikTok has a very successful algorithm.
Yes, and TikTok is a very unique app. So what impact could selling its US operations have?
Yeah, so this will big impact. So there will be tensions between the US and China, and the Chinese government is already arguing that all these debates about national security do nothing have to do with TikTok itself. Of course, a lot of user data is used and there are some privacy concerns, but we also see this privacy concerns, for example, for Facebook, YouTube or any other platform, because they are based on online marketing, so they have to collect all the data. So it might be assumed that this might lead to more strategic geopolitical issues between US and China.
Right, and TikTok is also an e-commerce market. How could losing its operations in the US, impact e-commerce and marketing?
Yeah, so this would be a definite change in e-commerce in the United States. And that would mean that we have a lot of content creators, influencers, that would have to start from the scratch. So they would lose all their followers if the platform would be closed in January in the United States. And that would also mean that revenues get lost here, because you cannot shift from one day to another to a platform, and you cannot create a follower or membership that is of the same significance as TikTok is at the current moment.
And could we see more governments moving with the same motion to ban TikTok?
Yeah, definitely. So we have German government, for example, or the European Union, who are arguing that TikTok is creating disinformation campaigns and is also collecting a lot of data. And also we see several countries arguing that this is of national interest that the platform is banned.
All right, Dennis Kenji Kipka, thank you very much for joining us today.
Thank you so much.
Now, Volkswagen workers in Germany are fighting back against cost-cutting plans, which could lead to wage cuts and factory closures. A fourth round of talks has just begun, but strikes are now spreading. Nicholas Morgan has the latest.
Volkswagen is facing what could be the biggest challenge in its 87-year history. Talks between the car maker and unions over plans for its first ever factory closures have hit a deadlock. It sparked protests and strikes at 9 plants right across Europe, including its headquarters in Wolfsburg.
We are totally ready to go on strike. The mood is obviously subdued since they show absolutely no goodwill. We are all scared. Many of those who are nearing retirement are really scared that they could lose their jobs now.
VW not only wants to close plants, but also to cut wages by 10% and insists its survival depends on these cost-cutting measures. It claims demand for cars in Europe has fallen by 2 million annually since 2018. The company also says it struggles to compete with cheaper Asian rivals. But unions accuse Volkswagen of putting profits above people.
We have to fight for our jobs and our future and for the people who will follow in our footsteps. 20 years ago, we saw the same drama. Already at the time, we accepted wage cuts, and now it's back to zero.
All three of the plants tagged for closure are in Germany. Protesters say they are ready to escalate with 24-hour strikes if a deal is not reached at the latest talks.
We are here because we are angry. We are here because Volkswagen has escalated the situation and has not yet been willing to seek a compromise.
Volkswagen must balance cutting costs while protecting its iconic reputation. Meanwhile, workers are determined to fight for their futures. Nicholas Morgan, TRT World.
Have you ever wondered what happens to your old clothes? If you live in the United States or Europe, many of them are sent abroad. In northern Chile, some end up in huge desert trash dumps. But a new company is looking to fix that. Michael Fox has the story from Iquique.
Iquique is one of South America's most important custom-free zones. Each day, containers of used clothes arrive from the United States, Europe, and South Korea. They're sorted and sold to retailers, mostly for export to Bolivia. But some of the clothes also end up here, dumped and burned in the desert. Thousands of tons of used clothes have been dumped in recent years.
We don't know how many clothes are being dumped there today, because they are being burned immediately.
One company is building a solution.
This might look like just another pile of used clothes discarded in the desert, but these garments are different. They're set to be recycled.
It's an ambitious project from the new company Resitex, created by the Turkish clothes importer Bayram in alliance with the Turkish furniture company Royal Lux.
We already work with used clothes. The lower quality items sell, but at a lower price. We want to take advantage of this product to transform it into something else.
They plan to recycle leftover and unwanted clothes into new fiber for everything from pillows to insulation and even mattresses. They're laying the foundation for the new factory now. They say it will be the largest recycled textile manufacturing plant in South America. They hope to be operational by April.
We are creating a before and after in the circular economy here. A before and after for sustainability and environmental awareness.
Local officials say this is exactly what the region needs.
The municipality can't respond to this problem alone. We don't have the tools, nor the agility to implement solutions like the private sector. And this is the best news that we've received.
Edgar Ortega says he believes the problem of the desert clothes dumps will be resolved within 5 years. Environmentalists say it doesn't fix the root issue of the fashion industry's mass production of more clothes than could ever be used. But in this corner of Chile, Resitex is an alternative that plans to create something new from items that were once dumped in the desert. Michael Fox, TRT World, Iquique, Chile.
66-year-old John Dramani Mahama has won Ghana's 9th election since its independence with 56.5%. Mahama becomes the country's first president to make a political comeback, 8 years after being voted out. But it hasn't been an easy journey. He now faces the even greater task of turning around an economy in crisis. Grace Korea-Kanja has more from Accra.
Third time's the charm for John Mahama. The president-elect was Ghana's leader from 2012 to 2017, but failed to secure the top job in both the 2016 and 2020 elections. He has now made a comeback.
Initiating important governance reforms and sometimes initiate severe measures in the next 4 years to reset our nation and bring it back on track as the Black Star of Africa.
He's been a member of parliament, deputy minister, vice president and president. But his first term was marred by power cuts which dented his reputation, as well as corruption allegations, although no charges were formally filed against him. He now inherits a nation currently experiencing an economic crisis. The country is still recovering from a $30 billion debt default in 2022. The rising cost of living, coupled with a currency devaluation, has led to a $3 billion International Monetary Fund bailout.
I expect him to reset the country, like he said. I expect him to reorient what it means being a Ghanaian. and what public service is. That public service is not thievery, all right? It's not stealing the people's money. It's true service. I expect him to drive reforms that will empower people economically.
The youth of our time today are really struggling. You know, there is vision, but the system is not favorable. We believe with his competency, we'll do better as Ghanaians.
He plans to implement a 24-hour economy policy, employment creation, agricultural modernization, and social reforms. He wants to tackle corruption as well, saying unchecked procurement processes are a major source of graft. On informal miners known as galamsey, he intends to bring in stricter enforcement and land reclamation initiatives.
For the next 4 years, President-elect John Dramani Mahama and his National Democratic Congress Party are under pressure to deliver every single promise they made and better the lives of these Ghanaians, knowing full well that if they don't, they risk being voted out in the coming elections, like has been seen across several governments in Africa and the world. Grace Kuriakanja, TRT World, Accra.
Well, that's all your business news for now. Thanks for watching.